Hello everyone, welcome back. Welcome back to the chat room. My name is Ed Ponzi. Great to be here with you today. We've got a bunch of things going on. We've entered a trade in the currency market. We've entered a trade in the stock market. And I want to get all that information out to you today. And we'll also get caught up on all of our old business as well. Right here I've got a picture up of the euro pound, which is really showing very good resistance on the 20-day exponential moving average. And if you look at this today, I don't know if you can see this or not, but it says the high is 79.79 and the moving average is 79.79. And so you might be thinking, well, why didn't I get filled if the high is 79.79 and the moving average is 79.79? Then why weren't you filled? Well, the answer is because there's two prices. There's the bid and the offer, and this chart runs off of an average of the bid and the offer. So, the lower of those two prices, the bid, because you buy on the bid and sell on the offer, the bid has to come up to that moving average, and it missed it by about a pip. The offer made it up to that moving average, but the bid did not. So, by the way, I was looking to short on there, not to buy, but we missed by about a pip. But it doesn't matter for me personally because I'm already long the pound, and I don't want to be long I'm already long the pound against the yen, so I don't want to be long the pound against the euro as well. But I know a lot of you out there are looking at this trade, and you've been keeping your eye on it. And here we go, right into the moving average today, very close. And most likely you get another shot at that over the next few days. So, don't rush it. Be patient. If you do enter that trade, your stop should be half of the ATR. Now, the ATR is very low on euro pound. The ATR is only 28 pips. Look at the way the volatility has plunged here. And you can see, it's 28 pips a day, so half of that is 14. So really your stop would go 14 pips above the 20-day moving average, and then you would trail down, keeping the stop above the moving average by half of the ATR. That's called the FXED trade, right? And that's good stuff. So anyway, looking forward to hearing if some of you guys make money on that or not. Me personally, I can't take it because I'm long pound already. I'm not long the pound against the euro, but I'm long the pound against the yen, which is basically a break-even trade at this time. This has gone, we were up about 150, and now we're breaking even. I'm not concerned about it. It's not a yen move so much as it is a pound move. You take a look at the yen against the dollar, right, and you see nothing. This is perfectly flat. It's been perfectly flat for a long time. We bounced off of 101.20 yet again and bounced back up. So the yen against the dollar means nothing, but it's the pound against the dollar that's showing you some weakness. You see the pound is rolling over here just a bit. Now, to me, this move in the pound against the dollar looks very much like a pullback within an uptrend. And you see that green line that we have in place? That basically would be my target, not the moving average, but this line would be my target for an entry, and that target is around 169.75. Why would I want to buy it at 169.75 instead of buying it on the 20-day moving average? Well, please show me where the 20-day moving average is acting as support on this chart. The market completely ignores it all through this area. It cuts through again and again and again and again and again, right? And back down here, it cuts through again and again and again and again and again. So the price has no respect for the 20-period moving average on pound dollar. Therefore, we don't care about the 20-period moving average on pound dollar. We are much more interested in this level, which was resistance, 169.75, and therefore it should act as support in the future. Okay, so much about trades that we did not take. I'm going to show you now one that we did take, Euro Swiss. We are now long And here's one. Talk about low ATRs. This thing's moving 12 pips a day. That's outrageously low. But I'm going to show you the setup. We're not worried about the ATR. The stop on this one is below 120, and you can see the number 1 here. That number 1 is at approximately 121.50, and it indicates a level where I'm interested in taking a trade. The number 2 is at 121 even approximately. The number 3 is at 120.50, and the number 4 is way down near 120 even. And if you're wondering why I like this, there's your line in the sand at 120. The Swiss National Bank has said on numerous occasions that they will not allow the euro-Swiss franc currency pair to break through 120. Now, why not? Why do you think the Swiss are so concerned about the euro-Swiss franc exchange rate? Well, think about it like this. If you look at a map of Switzerland sometime, and you will see that it is surrounded on all sides by European nations that use the euro, surrounded by Germany, Italy, France. And really it is completely encircled by countries that are using the euro, and here in the middle of that is an island that uses a different currency. Not an island surrounded by water, but an island surrounded by Eurozone nations that are part of the European Monetary Union. Switzerland is part of the European Union, but they are not part of the European Monetary Union. European monetary, money, they don't use the euro. They use the Swiss franc, okay? So anyway, we firmly believe the Swiss National Bank when they say that they are not going to allow this to break the line at 120. And we take, so imagine that you're going to buy 10 lots would be a full-size position. Just imagine that 10 lots makes a full-size position. I buy 1 here, 2 more here, 3 more here, and 4 more right on the line, or maybe just 5, 10 pips above that line. What's my reasoning here? The closer the price gets to 120, the longer I want to be. So I'm taking a little position here at 121.45, and if it pops up, I'll make money. But I'll make a lot more money if it comes down to 121 and then pops. I'll make more still if it comes down to 120.50 and then pops, and I'll really make a lot if it comes to 120 and pops. But what do I not expect to happen? I do not expect 120 to break, and I'd be very surprised if that were to occur. So we've really kind of been waiting a long time for this, and we missed other occasions to get in, but now the time is right to get long Euro Swiss. So our 2 currency positions right now, we are long Euro Swiss, we are long pound yen, and that's where we stand right now. We are able to take a long euro position because we closed out our euro trade. It's been about 2 weeks now since we took a 270 pip profit. Now, one of the interesting things about that, you may be saying, well, gosh, Ed's really not placing very many trades. You're correct. I want to keep the money that I made. Winning gets people excited, and when people get excited, they place more trades. And when they become less careful about the trades they place, they tend to lose, and then that's why they give back their gains. Now, I've been in this business for a long time. I've placed a lot of trades, and because of that, I don't really get that excited when I win or when I lose, or I have no trouble sleeping at night when I'm in a position. It just doesn't bother me anymore. And that's part of experience. I'm used to all this stuff. I've done it a million times. And because of that, I guess I just don't feel the need to go diving in and placing more trades. But I can tell you that's exactly how people lose money. They get too excited, and that's how they lose it. So listen, I'm long Euro Swiss. I'll buy more if it drops. My stop is below 120. So I do not plan on getting stopped out of this at any point. If it happens, it happens, but I don't think it's going to happen. It's not a question of, are they going to support the Euro-Swiss currency pair at 120? The question is, how close does it get to 120 before it bounces, in my mind? That's the way that I see it. Okay, so that gets you up to date on those. So we're long Euro, we're short Swiss, we're long pound, we're long yen. Now, part of this today also, when you now think back to that example about Switzerland being surrounded by European countries. As the euro became weaker, I'm going to show you the weekly chart, right? As the euro became weaker, 2008, 2009, 2010, 2011, what was happening to business in Switzerland? People in Switzerland refused to shop in Swiss stores. There were literally the buses that would come and pick them up and take them to malls on the other side of the border in Germany, France, and Italy. Why? Because everything was cheaper there. Because, why? Because the euro kept getting weaker and weaker, and therefore everything kept getting cheaper and cheaper. If why would you buy the same thing in Switzerland? You can just cross that border and buy it for a lot cheaper. So this is really hurting businesses in Switzerland. Businesses in Switzerland are feeling the pinch. Now, certain businesses are fairly immune to that. Like, for example, a large percentage of the Swiss population works in the financial sector. You have some of the biggest banks in the world, like UBS and Credit Suisse, are based in Switzerland. But for retail stores, they're just getting creamed. And this is to protect them and to try to keep the business, keep all that money from flowing out of Switzerland and into Europe. So they're trying to maintain, that's why they're trying to maintain the exchange rate at 120 or above. And the idea is that if traders understand, here's why they tell us ahead of time, if traders understand that they're going to create a big support level here at 120, you can see it right here. If traders understand that that's going to happen ahead of time, then they're going to buy. And they're not going to go against the Swiss National Bank. And if traders buy, in a sense, we are helping the Swiss National Bank. We're basically, they're saying, look, we're going to push this thing up, so hop on board and push with us. And by doing that, we make their job easier. They don't have to push it quite as hard. And they're making our job easier because we know that there's a huge buyer. If this thing drops to 120, we know that a huge buyer is going to step in. Another reason why Switzerland is going to continue this behavior, the Swiss National Bank, I should say, is going to continue this behavior is because it's been very profitable for them. In other words, the Swiss National Bank bought a ton of euros down here to prevent Euro-Swiss from breaking 120. As it went up, they sold them. They made a lot of money on it, and then they give that money back to the Treasury. So really, it's a money-making opportunity for the Swiss if it does come back to 120. So really, they kind of win in that it helps their economy because it prevents shoppers from crossing the border. And they also win because when they buy those euros and prevent the euro from falling any further, that helps them to make a profit. Now, another thing, now speaking of the euro, now Draghi gave a speech today. And let me tell you, this is another reason why I like the euro here. Draghi was speaking in Europe today in front of European Parliament. And his testimony, he came right out and said, now you know Draghi is a world champion jawboner. That doesn't sound like a good word. He's a world champion at jawboning. And that means he wants to talk the euro down. And so he makes dovish comments. He says unemployment is high, the risks are to the downside, inflation is low, and he says the ECB is intensifying preparations for quantitative easing. They're intensifying preparations to start buying bonds. Okay? And he says that quantitative easing falls within their mandate of the ECB, which I think a lot of folks would find that questionable, but Draghi says, yep, we're allowed to do quantitative easing. It's all good. Now, with comments like these, you would expect the euro to fall against the dollar, but it didn't. Well, very briefly, I'll take you to the 5-minute chart. Yeah, euro took a little bit of a dip, and then it gained it back. It was no big deal. Draghi really speaks in this area right here. Goes down, comes back up, not much difference. So that kind of encourages me to buy the euro, in this case against the Swiss franc. Why? Because he's out there jawboning and he can't bring it down. Draghi's out there jawboning the euro, can't seem to make it go lower. And that which cannot go lower could go higher, doesn't have to. Let's just say the path of least resistance seems to be higher if you can't go lower. Nothing's guaranteed, nothing's written in stone, but that's the way it is. Okay. So anyway, that should get us all caught up on currencies for the most part, but let's talk for a minute about the economic calendar. There's a ton of stuff coming up. So we had Draghi's speech. That was the highlight of today. He jawboned. Nothing happened to the euro. Tonight, you're going to get Australia, Reserve Bank of Australia meeting minutes. Don't be surprised if we get jawboning out of these minutes. I would not be surprised at all. He will try to weaken the euro because that's just it's the thing to do right now. Everyone's doing it, so why can't we? Right? That was a Cranberries album so that's some 90s rock nostalgia for you. Everyone's doing it, so why can't we? Which is really, in other words, everyone's going to jawbone, so why not the RBA? They could do it too. Bank of Japan also has a monetary policy statement coming out, but I don't expect much to happen from that. Coming up tomorrow, though, Tuesday should be interesting because you get Yellen. Yellen is going to be speaking right here. She's going to testify on Capitol Hill on Tuesday and Wednesday. This is the big fireworks display potentially. You know, look, there's a lot of different numbers coming up ahead of time, a lot of inflationary numbers. Not worried about that. I would be focused on Ms. Yellen here. Ms. Yellen, 10 a.m. New York time, Tuesday morning and Wednesday morning, but the big fireworks will be on Tuesday because Wednesday's testimony, if Yellen holds true to form, will essentially be a repeat of Tuesday's testimony. So it's all about Tuesday. And so now you're up to date on currencies. Hopefully that clears up everything. We are in a new trade. We like the euro a little bit here. More so because of the Swiss National Bank than for any other reason. Okay, and we still like our British pound against the yen trade. Now it's time to talk for a little bit about stocks. So we entered a Forex trade today. We also entered a stock trade. I want to show you, introduce you to Wells Fargo. Now look at those, all those lovely arrows on the Wells Fargo chart. I'll leave you for a moment to think about what those refer to. Can you guess? Time's up. 50-day moving average. There have been many, many occasions where Wells Fargo has bounced off of its 50-day moving average, and here we are after hitting an all-time high right here. Right, July 3rd, Wells Fargo closes at 53, which is an all-time high, split adjusted. It pulls back to the 50-day moving average, which has been the site of many a bounce here in May, here in April, here in March. February, now it's not perfect. February breaks through a little bit, but it bounces anyway. We had a bounce in November, several bounces in November. It broke down back here, but even further back, you get bounces back in early 2013. Let's just say that buying Wells Fargo on a pullback to the 50-day moving average has been a very good strategy in the past. And today, lo and behold, it's kissing that 50-day moving average, so we picked some up. We picked up some Wells Fargo. And The reasoning might surprise you a little bit. I mean, the stock that was in the news today was Citibank. But as I look at Citibank, Citigroup, what am I talking about? It's not called Citibank anymore, Ed. Citi, just call it Citi. It just shows you how long I've been doing this. I remember when this stock was called Citibank. Look at the chart. What is the chart saying to you? I say the chart says this is perfectly flat, range bound. And today's news, which was a solid earnings report combined with a settlement with the Department of Justice. In other words, Citibank basically has to give the Department of Justice $7 billion because of bad mortgages that were written and packaged. In other words, look, if you're going to write mortgages and then package them into products and pass that off as AAA, then they'd better be AAA inside that product. You know, if I buy, I don't know, a sandwich, and that's a expensive sandwich from a nice restaurant, and I put it in a package and take it home, when I unwrap that sandwich, it better be very tasty. It better not have any bad ingredients in it. Well, that's exactly what happened. Companies like Citibank were packaging and selling these mortgages as AAA, and they really weren't AAA. They had all kinds of bad stuff in them. And so Citibank shoots higher today because it's behind them. They pay the $7 billion, it's over, it's behind them. And they had good earnings. But I'm not buying Citi, but I like the sector. Why do I like the sector? Take a look at XLF. Do you like that sector? Do you like the sector? I like the sector. I like the sector, but the stock I get to buy on the cheap, on the pullback, is Wells Fargo, not Citi. Besides, Wells Fargo is obviously in an uptrend. Citibank is just dead money for the past 6 months. It's not going anywhere. So I'd much rather own Wells Fargo, obviously. Now, there's more to it than that. You see, Wells Fargo, why does the stock come down after earnings? Because Wells Fargo is the world's, not the world's, maybe the world's, but definitely the U.S.'s largest mortgage originator. Right? They're the biggest mortgage maker in the U.S. Writer of mortgages. I'm searching for the proper term. They write more mortgages than anybody else in the U.S. And that's awesome, but it's not awesome because mortgage business is slowing. You know, everybody already refied. Mortgage rates are creeping up. Economy still isn't that great, so houses are not flying off the shelf. And a lot of people looked at those mortgage numbers and said, gosh, we don't really like Wells Fargo because of the mortgage situation. Well, there's more to Wells Fargo than mortgages. Wells Fargo has an asset management arm that is on fire in terms of how much assets they are bringing in. My understanding is the assets jumped by almost 25% over last year's second quarter, and they jumped by 15% over this year's first quarter. So sequentially speaking, from the first quarter to the second quarter, the assets bumped up by 15%. They jumped by 25% on a year-over-year basis. How amazing is this? This is very good stuff. So the thing that people are missing with, the point that they're missing with Wells Fargo, it's not just a mortgage company. There was very strong growth in asset management. There was very strong growth in commercial lending, and there was very strong growth in consumer loans. Eventually, I think people are going to figure that out. But all I know is it's pulling back to the 50-day moving average, so I'm buying. Okay, because I think they may have missed quite a few little things. All right, so we're long Euro Swiss and we're long Wells Fargo. Now, let's take a look at some of the other. I can't wait to pull up the chart of Amazon to show you because, man, are we happy. Listen, they say you can't time the markets, but did we not short this and ride it down and then buy it back at 310. And yeah, I closed half the position. I'm playing with house money, but look at this thing go. I'm still, I rode the short down. We rode the short down. We're riding the long up. It doesn't get any better than this. Look at that move by Amazon.com. Amazon, I mean, like they said, they say you can't time the market, gang. But all the technical said sell in here, so we sold it. The technical said buy it back at 310 because it was breaking. At this time, we were looking at that as a triple bottom, 1, 2, 3, and this was the break that we bought right there. We bought the break at 310. Boom, we're at 355. Hello. Feels good to win. But like I said, don't get too carried away. I feel good about it because I know that some folks out there are doing well because of this. I know Apple is doing very well for you. Another one of our long positions. Apple, very close to its all-time highs now, very close to its high for the year, just pounding its way higher. And by the way, market was way up today. Our shorts got creamed, though. Look at Lululemon, down nearly 4% today. Oof. Lululemon, hammered. Just hammered today. TJX, on a day when stocks were up, big red candle. Big red. It actually gapped higher and closed down. Didn't really move that much. Target we were out of. We closed Target in case you're not keeping up to date. I just don't like the way this is continually rising. Maybe the bad news is priced into Target. So I'm out of Target, but I'm short Lulu and I'm short TJX. We are long Apple. We are long Amazon. We are long Starbucks, which has done well for us. We're up a couple of bucks on it. We're long Dean Foods, which just kind of lays there. It doesn't really do much. We're down like 50 cents on this thing since we bought it. I really don't think much is going to happen, and then one day it'll get bought out. That's the way I see it. It'll probably sit there for 6 months, and then one day you'll wake up and it'll be worth 25 bucks. That's kind of the way I'm looking at it. It doesn't have to happen today or tomorrow. I still have some J.C. Penney, which that inverted head and shoulders just gets longer and longer, doesn't it? But that's okay. I can be patient with this. One of these days they're going to report good earnings, and suddenly all the analysts are going to upgrade it, and then after it hits 11, 12 bucks a share, then everybody else will start buying it. I'll buy some now. Thank you very much. Okay? And thank you very much for listening. I hope you enjoy this segment as much as I did. You know, the markets have been kind of quiet, so we haven't been placing as many trades. But you know what, gang? Sometimes it's the trades you don't place are the ones that make you the most money in terms of you can't lose on trades you don't place. And it's just like that old blues guitarist said. It's not just the notes that are played, it's the ones you don't play that you leave out that often make the difference on a good guitar solo. Well, you know what? In a good trading account, sometimes it's just the trades you don't place that make you the better trader. So anyway, thank you so much for listening. I hope you enjoyed it. Oh, I have one question. I'm sorry, I almost forgot. I did get one question, and this came from Vietnam, actually. From one of our fans in Vietnam, had a question. Says, Ed, I loved your book, Forex Patterns and Probabilities. My problem is my team, where everyone trades without a stop loss, and I do not do this. They're making money. I'm losing money. I have a headache. Please help me. Thanks very much. Okay, here's what's going to happen. Get rid of your team because they're going to lose all their money. They're not using stops, so of course they're winning now. They're winning until they lose. The problem is when your team loses, they're going to lose everything. Okay? They won't use stops. They just enter a trade, and they wait for the trade to go their way. They wait for the trade to come back in their direction. Well, guess what? That'll work for a while until it doesn't. One of these days, they're going to buy something, and it's just going to go down. And they're going to buy more, and it's go down further, and they'll buy more, and it goes down further. I'm not psychic. I've seen this happen a million times, okay? Your pals are going to lose all their money, and you're going to be the only one left standing. My advice is get rid of these people, or tell them what I just told you. Tell them that they're all going to lose their money, and you're going to be the last one standing. And you know what? It's true. because you're doing the right thing, which will hurt in the short term but lead to long-term success. They're doing the wrong thing, which leads to short-term success, but it's going to kill them in the long run. You will be the last one standing, okay? And that goes for everyone out there. If you're trading in a group, if you're trading with people that are doing the wrong thing, get away from those people. Get away from those people. Wish them well. Just wish them. Don't get mad. Just wish them well. All right? And you'll be better off. You'll be happier for it. Okay, my name's Ed Ponzi. I'm out of here. I'll talk to you again in a couple of days. Until then, everybody have a fantastic day, and I'll speak to you again very, very soon. Take care.